Hi, good greetings to all the students. Today we reach the statement of cash flows. Now, statement of cash flows talk about the movement of cash inflow and cash outflow. So the first thing you would learn to do today is about cash flows from operating activities. So when we talk about operating activities, it actually means day-to-day operations like sales, purchases, alright, as well as most of the items in SOCI. For example, receiving of rents or rental income can be other expenses. For example, prepaid insurance or insurance. It can be expenses like wages. So that is all considered under operating activities. Okay, so before we go further, let's look at the snapshot for today's video. Okay, so the first thing that you see here will be cash flow from operating activities. So what happened here? Cash flow from operating activities, like we said before, cash inflow and outflow, there is two signs. One is the positive sign and the other one is the negative sign. So cash flow from operating activities will be divided into two videos. So the first video will be receipts from customers, meaning to say how much money we collected from our customers. So the first thing we talk about is if we collected money from our customers by cash sales. Cash sales means when we sell, we receive cash. That would be considered cash sales. Or if we are our service company, would be fees collected by cash. Alright. Followed by collection from our accounts receivable. Account receivable is customer that we sell to, the goods reach them, and they still owe us money. Alright. And we also look at the income. So this particular information, you will get it from SOCI as well as cash receipts from other income. Okay, without much further ado, let's look at our slides for today. Okay, when we are doing statement of cash flow, information that will be given to us will be statement of financial position. It must be in 2 years. So if you remember, elements in statement of financial position will be A, L, and EQ. And at the same time, they have to give us extract of income statement or just additional information in terms of what is inside income statement. For example, income, other expenses, or financing costs. Alright, so means to say what? Statement of cash flow cannot be done unless SOCI has been done as well as SOFP has been done. Why is that so? Because SOCI connect the information from SOFP to SOCI. Let's look at how it is actually connected. Okay, so first connection will be talking about cash flows from operating activities due to receipts from customers. Okay, so the first thing we'll be looking at will be when we receive from a customer is cash inflow. That's the reason it's positive. So we talk about if we receive our sales or fees by cash, okay, that would be the amount that will be calculated. And where to get this amount? Normally this information will be given under additional information. Alright. Followed by just now we talk about. Alright. So basically under recollection from account receivable, we will reconstruct account receivable account to find how much money we receive from a customer. we will reconstruct our unearned income account or accrued income account to find how much fees we have received or any other receipts from other income, for example, dividend, alright, or rental, how much we receive in terms of money. So the whole purpose is to find cash at bank. Alright, so receipts from customer, got 3 things here. Cash sales or collection from our customers, where we will reconstruct AR and we have to reconstruct AFDD. And C and number D talking about how much income we receive from our customers. Okay, so let's talk about the first component from receipts from customer. If we have to count or calculate how much cash sales or fees collected by cash, okay, again, this information is either found in extract of SOCI or under additional information. So it can look like this, where you can see the sales component got 2 components, cash and credit, or it can be under additional information where the cash sale is revealed. So 2 way of presenting to you in the question, how much cash sales would be 50,000. Alright, or how much cash sales in additional information. So this case is pretty clear. There's no calculation involved. Normally just look up for the information. Alright, okay, next. Now, this is more tricky. What happens we sell by credit? When we sell by credit, we have accounts receivable. So when we have account receivable, alright, we will find the information given for account receivable in 2 places. One in statement of financial position as the balance carried down, as well as the balance brought down as the opening balance and the closing balance. Alright, and we find the information of the sales by credit in SOCI. So in order to find out how much we collect from account receivable, we have to learn how to reconstruct account receivable. Now, students, in the exam, right, under the workings, you will open the account. So in order to open account receivable to find how much you receive, most of the time we have to reconstruct AFDD in order to find bad debts. Unless the bad debts are given, then we have no need to reconstruct AFDD. Okay, let's look at the next example. Okay, so this is how we reconstruct account receivable. Account receivable is our asset. Positive sign here, negative sign here. How do we use the positive and negative sign? It means to say, customer owes more here, customer owes less here. Alright, so this information from SOFP, this information from SOCI, this information from SOCI or additional information, sales return from additional information or SOCI, discount allowed from additional information or SOCI, bad debts come from AFDD. So how do we know this information is on the debit and the credit? When we sell, customer owes more. When customer pay us, cash at bank, customer owes less. When customer pay us, we allow discount. When customer return the products, they owe us less. That's why it's this type. Okay, so bad debts, when bad debts happen, means customer die or bankrupt. So we have to write off the debt. That's why it's on the credit sign. Alright? Okay, when it comes to reconstruction of allowance for doubtful debts, remember the element for allowance for doubtful debts is minus asset or minus AR. So opposite of AR, positive sign here, negative sign here. Wherever you find the positive sign is the opening balance. Wherever you find the negative sign is the closing balance. So this one comes from SOFP. Now, doubtful debts is what we get from SOCI. Okay, Doubtful debts is always here because if it's profit and loss, doubtful debts is expenses, it has to be under debit side of profit or loss account. So bad debts is always here because when we credit bad debts to close bad debts, alright, it will transfer to AFDD on the debit side. So remember, there's only 4 items here: opening balance, closing balance, doubtful debts from SOCI, and bad debts. Okay, so let's look at the example for how to reconstruct using all this information. So I want you guys to take a minute or 3 minutes, alright, using the information here to do 2 things. So what 2 things are we trying to do here? First, students, try to take out a piece of paper and using this information from SOFP as well as extract from SOCI, reconstruct your allowance for doubtful debts, alright, to find your bad debts first. Okay, and then use the information from your bad debts, open your account receivable, put the opening and closing balance, okay, put where the sales is, put interest charge if there is, put where the sales return is to find how much your cash at bank. Alright. So I give you guys a bit of minutes. Okay, you don't have to do it perfectly. Just put the figure where debit and credit exist. Okay, so the first thing you should need to count is your AFDD. Did everybody get 7,500? So what you do is the opening balance put here, the doubtful debts put here, carry down AFDD put here. So bad debt is the balancing amount. So 15,500 plus 10,000, you get 25,500. And then you minus your 18,000, so you get 7,500 as your bad debts. Okay, next. Okay, so that's how you get receipts from customers when the company sell by credit, and this is the money that we receive from our customers when we reconstruct account receivable. Okay, so that's all for today. So we continue for the next video. Thank you.